between this current AI cycle and the internet bubble?
A little bit in how some of the price action has moved. Again, they're not straight lines up and to the right. They're these parabolic types of curves that, again, you should take profits when those moves happen. And then a little bit in some of the options activity. Like right now, people are being very aggressive with calls more so than puts. So you see some funkiness there. But again, the big dissimilarity, back to what we were talking about before, is there's actually earnings and fundamentals to talk about here.
Oh, what?
That was not
Pets.com
the
didn't
case
have
in the tech
earnings?
bubble.
Pets.com had no earnings, right? No earnings for
Well, and a
Pets.com.
lot of those IPOs back in the tech bubble were just like selling to each other on paper using IPO money back and forth. Like these are real companies generating real dollars. Like let's be real there. So, there's dissimilarity. That dissimilarity alone is really important to us.
Nvidia's stock has taken a hit recently, sliding around 20% below its all-time high. The question on every investor's mind is, will this tech giant rebound? In a whirlwind of market fluctuations and speculative sentiments, Nvidia has found itself at the center of the stock market's latest buzz. Known for its prowess in high-performance computing and artificial intelligence, Nvidia's shares have seen a notable dip. While concerns about the company's valuation and forward growth prospects form part of the equation, recent notes from Raymond James's analyst, Javed Mirza, have introduced an additional layer of analysis. Utilizing technical indicators like the Moving Average Convergence Divergence, MACD, Mirza signals a potential intermediate-term corrective phase for Nvidia. This analysis brings us face-to-face with the mechanics behind Nvidia's price dip, hinting at both threats and opportunities within the semiconductor sector and especially at the tech giant, Nvidia. By delving into the complexities of technical analyses and their consequences, we aim to illuminate the nuances behind Nvidia's recent stock performance, what's next in line for this titan, and ultimately, whether now is the right time to invest. So let's find out. But first, if you want to keep up with Nvidia's latest updates and keep up with the stock market's latest news, you can follow our Twitter account. We post multiple times daily about the biggest changes and catalysts in the market, so click the follow button if you don't want to miss the newest market updates. Now, back to today's video.
Why do you still like AI? It sounds like maybe you're short-term, concerned about the valuations, but I mean, so longer term, you view AI, this is as big as people are making it out to be. It will structurally impact the economy. It's going to structurally rewire how companies make money and treat their employees. I mean, are you all on board here?
Maybe not that aggressively. Like, this will change how we do business. Where I'll say I'll make a subtle difference, and I think this is an important one. We human beings don't move as fast as markets sometimes want us to. I do think this changes businesses, because every business right now is looking for productivity gains. And I think that's what sets apart the US economy from a lot of other economies in the world. I think that sets the S&P 500 apart from smaller private businesses out there. And I think AI is going to clean up some low-hanging fruit. And then some of the other artificial intelligence, the old AI and robotics and stuff like that, I think that helps improve American manufacturing in some traditional businesses. So yeah, I'm long US companies, I'm long US fundamentals, I'm long productivity, and I think AI, robotics, and automation tools all play into that.
Well said. All right, hang with us, Drew. We're going to go off for a quick break. We'll be right back. Lots more to talk to about on the other side of the break.
For investors grounded in market fundamentals, technical indicators like the MACD often seem like sorcery from the Wall Street grimoire. But make no mistake, the Moving Average Convergence Divergence (MACD) indicator is a critical tool for identifying momentum shifts in stock prices. According to Raymond James's analyst Javed Mirza, Nvidia's stock has breached this mechanical sell signal, suggesting potential short-term volatility that wouldn't last for long anyways. Many would argue that relying solely on technical indicators for investment decisions is akin to forecasting the weather by cracking open a fortune cookie. Yet, historical evidence often lends some credibility to these signals. The MACD comprises a set of price trends which, when broken or breached, can indicate optimal entry and exit points for traders. For Nvidia, the violation of this particular indicator could signify amplified selling pressure, thus magnifying downward momentum. It's no surprise then that the stock has dipped approximately 20% from its peak. Diversified approaches make for nuanced market strategies, and volume, along with moving averages, add layers to a trader's strategies. Mirza's update also points to Nvidia's stock breaking below its 50-day moving average, a critical threshold often viewed as an indicator of short-term trends. Coupled with notable trading volume indicating selling pressure, one can't help but think, is the market waving a cautionary flag? Funny enough, technical signals can sometimes feel like high-maintenance celebrity personalities. They demand continuous attention and analysis. For long-term investors, it's a different ballgame. The market Zen approach tends to ignore these blips, leaning instead towards robust fundamentals and wider market trends. But for those who thrive amid volatility, Mirza's note may provide just the adrenaline rush they need. But that's not all of it, so let's go through the rest. Hello everyone, and welcome back to Investocracy.
All right, welcome back to Opening Bid. We're talking to Citi's Director of U.S. Equity Strategy, Drew Pettit. Drew, you do a lot more than, of course, study AI and all the trends and the markets related to AI. You actually have other stuff that you watch. What is the vibe with respect to the election? You know, I've been talking to a lot of folks on the street. A lot of clients are asking them, how do you play Trump versus Harris? But is that just the wrong way to be thinking about investing into the election? Or should you ignore the election?
And I don't think you can ignore this, but I think we're not spinning how do you find the winning trade off of either potential president. It's what are the risks? Right now, I just feel like people are looking for the way to make a quick buck. And again, back to it's not fun to talk about, but I do think there's risks on both sides. And I hate to be completely neutral. I'm not trying to punt this one, but you know, the Dems bring up tax risk and what that's going to do for businesses and growth. And the Republicans bring in tariff risk, which disrupts a lot of the multinationals that are heavy weights in the S&P 500. So it's kind of two-sided risk. It doesn't feel like either party is really great for markets.
What's the biggest risk, Drew?
Taxes get us nervous. But right now, when you look at the polls and the potential, I don't think a Dem sweep is likely. I think you're more if the Dems win or take the presidency, you probably have some mixed house, so it waters things down. I get a little bit more worried that tariffs, while they may not be as aggressive as an impact completely across the board, that the Republicans have a higher likelihood of getting all three houses and pushing some of that agenda through. So tariffs, it's a funny one. It's really hard to measure. And I think that's why people can't really hedge it or trade it ahead of time.
Regardless of these technical downturns, Nvidia continues to shape the future of high-performance computing and AI. It's like being Leonardo da Vinci in a world full of aspiring painters. The breadth of Nvidia's influence covers everything from advanced gaming graphics, data centers, to automotive technology and AI. The market's mild panic in the face of temporary technical drawbacks may just be an opportunity for the wise to capitalize. Nvidia's advancements in the semiconductor industry aren't merely skin-deep. They're fundamentally altering the landscape. With high-performance computing and AI steadily taking root in various sectors, Nvidia's foundational role hints at long-term prosperity and widespread applicability. Additionally, market sentiment often swings like a pendulum, and in this case, it has knocked Nvidia's stock off its high perch. However, stepping back to look at the bigger picture, substantial data from Nvidia's quarterly earnings reports and forecasted growth trends signal robust future potential. Just take a glance at Nvidia's revenue growth. The numbers do a convincing ballet. For fiscal year 2022, Nvidia reported a 53% increase in revenue, with significant contributions from its data center and gaming sectors. These aren't merely flukes. They illustrate a company positioned to ride the waves of tech innovation. Even in a climate of cautious optimism, snagging shares while they are below their peak can be a savvy move. Mirza's analysis indicates a short-term corrective phase, lasting potentially 1 to 3 months at max. Then, the stock will go back to constant soaring like it used to, so there's no need to panic, really. And this time frame aligns with historical phases seen in other significant tech stocks, further bolstered by the intricate symphony of technical indicators and larger market forces. So what to expect for Nvidia's stock? Let's find out. But first, if you made it this far into the video, thank you. These videos take a lot of effort and time to make, so if you enjoyed them, please hit the like button and subscribe to the channel. This goes a long way in helping us grow. That said, back to the video.
Is the taxes issue lose-lose? And hang with me here, because let's say Democrats stay in the White House, those Trump tax cuts are going to roll off. But if President Trump does get back into the White House, isn't it going to be hard for him to push through more tax cuts given where deficits are in this country? And perhaps he can't extend all those tax cuts, which could be a risk to markets.
That's the offset. When people talk about, oh, they'll extend the tax cuts, Yeah, they probably do. But then, you need the revenue side for the government to get kicked in. So that's when the tariffs come into play. That's the concern to me. If you don't extend all the tax cuts, it's a mild negative. I think tariffs get a little bit more disruptive if they get put in aggressively right away. And then, honestly, you're kind of touching on this point. We can get into it more, but the thing that keeps us up at night is no one wants to address deficits. Like, let's be real.
Well, everybody wants to put it. I'm not getting Social Security because of them. I mean, let's be honest, Drew. I mean, I'm still a young guy, but I mean, this is not going to be around because of all these deficits.
And no one's going to do anything about this until they see the problem coming immediately before their next election cycle. So like this, here's the problem. What are we going to do? Are we going to raise taxes? Are we going to cut spending? What are we going to do? And everyone just says, no, next question. So I think, again, back to investors want to look for the trades for the Dems or the Republicans and talk about economics and what it means for markets. And they just go, let's talk about social issues. Let's talk about immigration. Let's talk about different things that is not the biggest concern, how to deal with the deficit.
Investing often feels like surfing. Catching the perfect wave involves a blend of timing, skill, and a bit of luck. Nvidia may be below its recent all-time high, but its foundational footing in high-performance computing and AI is rock solid. The current price correction could very well be a golden ticket for those with patience and foresight. According to Javed Mirza's technical analysis, Nvidia is navigating through a short-term corrective phase. But look at the company's broader market dynamics, and the future glows with potential. The stock's current position, whether influenced by technical indicators, trading volumes, or moving averages, remains strong within a foundational context driven by innovation and market demand. In the end, perhaps Nvidia's temporary dip is the market's way of offering an open invitation. With eyes set on future advancements and robust backing from high-performance computing and AI sectors, there's compelling evidence to consider an investment in Nvidia. Accordingly, we view Nvidia as an incredible investment, especially with the current price. But what's your own take? How do you perceive Nvidia's potential in this exhilarating ride of market dynamics? Does this 20% dip have you skeptical, or are you seizing this as an investment opportunity? Here lies the million-dollar question, and one which only time will reveal. If you would like to know what companies like Nvidia have been up to these past few days, go ahead and click on the next video on your screen. See you there.